Hey everybody, hope you guys are all having a good day. Sorry my voice sounds a little bit different. As you guys know, about a month ago now, the bottom of my house flooded out, and so they're fixing it up finally today. But that means I'm using a secondary computer with a different headset from a friend, so I can make sure I'm going live for you guys today. So, as far as what we're going to be covering today, it's really going to be the technicals of 2024, plus a little bit of setup just to give you an idea of what's going on right now, because I know I love technicals. I know a lot of you guys love technicals, but in reality, there are a few big factors that we just have to keep track of just to make sure we understand how bad things could get or how good things can get over the year of 2024, because as you guys know, it is going to be a roller coaster ride. So, first of all, let's just start going over some data here. Then we're also going to be going into the Dow Jones, NASDAQ, SPY, some actual mega cap stocks, and then we're going to be looking at cryptocurrency as well. That way you guys have a pretty good understanding of what's going to be coming our way, okay? Now, first of all, I want you guys to understand that inflation is in a very good spot. Let me, in fact, actually drop this down. Let me open this up just a tad so you guys can see what's going on. Inflation last month was at a nice 3.1. As long as inflation continues to come down, hopefully 3% or lower next month, we're going to be good for kind of a month-to-month basis, basically. The only thing that's going to derail this slight rally that we're looking at from like a fundamental perspective on inflation is basically if we have any uptick whatsoever. As soon as July came around and we went from 3% inflation to 3.2, you guys would remember over here, all of a sudden everything started to come down. 2 months of growing inflation data really caused the market to have a big hissy fit. As of now, it doesn't look like that's going to happen. It looks like inflation is under control and even decreasing. But again, if we do have a hiccup, that's going to play way more into the hands of the bears, especially with the data we're going to be talking about over the next few minutes. A few of the factors here, the overall economy just seems to be getting a little bit worn out. If you guys go to any of the major news websites, I know TradeZing's a good place to find all of them together. What you're normally going to see is a lot of people saying, hey, 2024, we might have a small recession, but it's not going to be bad. But the consumer is still strong. The consumer is still happy. I disagree with the consumer is still happy at this point due to the good old shrinkflation and inflation. However, they're really pointing out that we're probably not going to have 2 quarters of negative GDP growth. It's probably just going to be somewhat of a slower economic year where GDP growth is still positive, but drastically lower than where it is right now. I would say at this point, flip a coin because we've been pushing off this recession for quite a bit of time. And that's really because the government really injects a large amount of money into the economy. We've been passing trillion-dollar bills every year, and that money goes somewhere, and it usually goes right back into the economy, helping people out. And, it does have consequences down the road, but, we're a very short-term thinking country out here, and our government reflects that. Now, a couple more things here. This is the wild card for me besides inflation. It's basically what happens over the next year. You guys know there's an election year coming up. Stocks usually perform in a very volatile way during those years because, if you guys remember, everybody was freaking out in 2016 about Trump, and 2020, everybody was freaking out about COVID and everything going on there because all those laws that were having to get passed to help people that had lost their jobs, a whole bunch of carnage. This time, it's a little bit different. Everybody's really focusing on, is America really going to go into a spiraling debt crisis? Because America is a powerful country and we really are the wealthiest of all countries, we've been able to have a lot of stupid policies as far as it's been concerned of let's spend money here, let's spend money there, spend money everywhere. Everybody gets a nickel except for the average guy, right? So because of that, we're now starting to see debt slowly escape out of our hands, out of our grip, so to speak, and things are just not looking as optimistic as they once were. Now you're starting to see a lot of negative outlooks, negative watch, a few stables right now, but really, it's not looking good just because we're going to have trouble over the next few years just being able to afford our debt. And that brings us into January here. January, and we'll bring this up. Actually, let me just bring up the stock market here for you guys so you guys can see this here. January, we have a few things going on in Congress, and that's really going to be about passing budgeting bills. So there could be another government shutdown coming up pretty soon. Honestly, over the last like couple years, there's been a lot of chaos around these times. I would think this is going to be a good opportunity for the market to cool off just a tad. But at the end of the day, we still haven't had that shutdown. So I'm not going to really say, hey, you should be buying puts, or you should be, looking for a crash and burn of the market in anticipation for these dates. Congress is very busy right now. They're doing, I think they're going to work on budgeting agreements. They still have to pass the Ukraine aid deal, Ukraine, Israel, Taiwan, and border security package. That still seems to be in rough negotiations. And then after all that, they're really just going to focus on, I think, the House, maybe that impeachment stuff going on with Biden, but that doesn't have much to do with economics here. It's just going to take away time, basically, from some of those other deals. So hopefully they can kind of, as the saying goes, walk and chew gum at the same time. So let me go over here very fast. Let me just search this up for you guys. What I want to look up is basically the date for the budget House dates. Oh, that's not what I'm looking for. Congress. I'm not looking to fix up my house. My house just flooded. Let me see if I can find a news story on this for you guys. I had one up, but I think I accidentally closed it out 2 weeks ago. One month ago. They have not been talking about this as much as I thought they would be. All right, well, let's go over here to the AP News. Let's make sure we pause this video very fast. All I'm really looking for here is just, there you go. By extending government funding for some agencies and programs until January 19th. So that's only a few weeks away from where we are right now. That's really the concern. As we get moving along, and you can even see and continuing funding for others until February 2nd, those 2 weeks are going to be, let's just say there's going to be a lot of drama, a lot of turmoil. A lot of people are going to be freaking out. And that's where you're going to see some of these moves in the stock market, particularly in the front of the year, actually start to pull back just a tad. So this is where we're going to start going over a lot of technical data. I'll try to keep it nice and simple for you guys. We're going to look at Dow Jones, NASDAQ, SPY, Bitcoin, dollar index, and even look at some oil here. And we're just going to be going over some monthly and weekly charts to help you guys out. And then from there, we're going to start to look at some mega caps as well, because those mega caps really control the entire market because of how much money has really been pumped into those suckers. So first of all, we're going to be looking at the Dow Jones. This took the longest to really have a breakout, as you guys might imagine, after the recession we had in 2022. We had a breakout, but it really didn't amount to something large like breaking out over here back in February of 2023, like everything else. See how the NASDAQ really just broke out early 2023, it kept on going. Early 2023, that's Bitcoin, there we go. Early 2023 over here, nothing happened. It went sideways for the longest time. The Dow Jones is finally playing catch up. I would say, we saw that acceleration for the NASDAQ in March, though, mostly because of what was happening in the AI world. So now that we're hitting all-time highs again, in an economy where the average American is not doing well, which is the crazy part during all of this, you can kind of have this vision, as far as my vision, we are going to have some time in 2024 a fairly large crash. It'll look something more like this than we had during the interest rate hikes, and it's not going to be caused because of inflation. It's going to be caused because people are going to be laid off. They're not going to have enough money. And this is my personal belief that we will go into recession territory. I'm disagreeing a little bit with some of the big talking heads on the CNBC and Fox Business and Bloomberg. I actually think we are going to go into recession. It's just basically how bad, and no matter what, though, that recession, in my opinion, will cause prices to drop down pretty drastically. And we'll talk about this when we're talking about the mega cap stocks. But that's really going to give you an amazing buying opportunity. So as far as the technicals are concerned right now, all I'm going to do is just add a simple Fibonacci level on here. Usually a few different things you can do. This one's going to be this most simple. All right. This is where I said we might be okay for the next few weeks until we get into this debate as far as how do I want to say it? Just this government debt, government spending and stuff like that. As far as I'm concerned, we're pretty much hitting this one level here on the Fibonacci level. This is a weekly chart. We're probably going to close above this since it's Friday. That breakout should give us a little bit more wiggle room here on the upside. This is a short-term one. I was waiting patiently to see if we were going to break out. So far, it's good. On the daily chart here, you can see we're barely climbing. The 20-day moving average is screaming higher. Once we start breaking back down below that 20, that's when you know the jig is up for the short term. But as long as we're still above that, we're in a good spot. So let me bring out one more here. Because long term, if you guys are hoping for another spike, the most you can expect from the Dow Jones, in my opinion, in 2024, and if you're like a really bullish, is going to be about $41,000. It may go a little bit above to 41,220, like this line says, but to me, because I expect the slowdown in the market in totality, we may have a spec that comes back up here. Reality is going to get us back down. And I honestly don't think we're going to get up to that 41,000 mark anytime soon. But if you guys are really, really bullish, that's what you guys are looking for. The way I would normally look at this is I'd actually pull this Fibonacci level all the way down, go to the previous highs. And let's make sure that's actually accurate. There we go. And then pull this all the way down to the crash we had last year. Short-term wise, that 38,000 mark is perfectly acceptable for the Dow Jones to go above. After that, we go back up to that $40,000 range that we were just talking about a while ago, 40,000, 41,000. To me, as I watch this daily chart and I see how the 20-day moving average is coming up, I expect us to have a pullback here fairly soon. That pullback will not be some type of seismic crash that brings us back down to 32,000. No, it'll just be a small pullback while we wait for data to really give us an excuse to consolidate and go even higher. That's really what I'm looking for right now. Now, let me back up again, and I want to show you guys some longer-term technicals. A few things that you guys might want to know about. This is not going to be the most important data that I share with you guys. This is a monthly chart. What we're looking at right now is the MACD, the stochastic, and the RSI. Everything here is still bullish. MACD has been a little bit more choppy, but you guys can see it's been a very choppy chart over the past few months. The stochastic is still positive. It's starting to get into overbought territory, that's sure, but that kind of matches up with some of the technicals that we see up here as far as those resistance levels. And of course, the RSI is in more neutral territory. That's good and somewhat bullish, not necessarily like crazy bullish, but it's going in the right direction. Now, what I'm going to do here is drop all of these down, because basically what those three indicators told me is like we're bullish, but we're not fantastically bullish. So we're good. You should be happy with where those levels are. What I'm going to do is do two different things. This is a monthly chart, and I'm going to add a GAN box onto it. And we're going to be doing this for a lot of different stocks here, or let's just say the top three here, maybe, and we'll skip it for Bitcoin and Ethereum because those are a little bit more difficult because of how fast those things rise compared to everything else. So I'm going to add a GAN square on here. That is thick lines right there. That should be okay. I'm going to add it to the lows we saw in 2009, and I'm going to expand upon this by ranges of every 90. So I want to see 90, 180. Well, let's go. Let's jump up to 270. Yeah, I think 270 will give us a good forecast. All 2020, yeah, 2024 is going to be really distant here. That little range right there. So it'll give us an idea of what we're looking for. So now I need to go over here, go to ratios. We got a price bar ratio of 156. Well, what I need to do is actually do something a little bit different here. This is my bad. I need to actually make sure the log is off. There we go. That'll fix up these numbers a little bit. Still there, still there. All right. Now we're at 156. Let's go up to 100. That's probably going to be too low. That's fine. Yeah, okay. Let's go to 150 then. There we go. All right. And how's this working out? Historically, it seems like it's done a little bit of good. Some volatility here during COVID, of course, breaking out, finding some support, a little bit of resistance up here, and I like what I see. Okay, now to finish this off, I'm just going to be adding on one final thing here, and that's going to be a traditional GAN box. Nothing special about this. You're going to notice a lot of angles. I'm going to clean that up here in a second. Usually people hate when they add the angles onto these just because of how messy it makes the chart look. I'm pretty sure when people make fun of technical analysis like myself, they put up charts like this and say, oh yeah, you can see everything going on because of all these lines. And to a certain degree, they have a point. Basically, before I start going into this, you can see all these lines coming on. You can see how there's a little bit of resistance. You can see how they've had small impacts, but in reality, there's other things there that I'd probably say are going to be worth it more. This is kind of just a guideline, like, hey, if you see that line with St. Oscillator's telling you about a reversal or something, that's usually what I'm looking for. You could even see that steady line of resistance here, break out a little bit there. That's how people will usually use them. But for now, let's just actually take them off. Let's click on here. Oops. Yep, there we go. And I'm going to turn off the angles, and it cleans up everything. We just want to have those extra horizontal and vertical lines on just to add some extra Fibonacci's to all of this. So not Bitcoin. Dow Jones, as you guys can see, is actually headed for a pretty significant level of resistance. If we go over here to the daily chart, there we go. You can see we're kind of stuck in this realm right here. One of those highs is going to be 38,142, and above that goes up to 38,865, somewhat of a little bit what we were just talking about before with that other Fibonacci level. I still see this as the short-term top over the next few weeks. So let me go over here. See me next few months, right up here. I think that's the most we're going to get. After that, we are going to be having a little bit more of a consolidation period. After that consolidation period, going into February and March, I would say that's when things are going to start to look a little bit more rough for us, especially because in March is where the market is pricing in right around here. Oops, right around here. March is where we are pricing in rate cuts. So during this period of time that you guys are looking at, during this period of time, we're going to get inflation data. If inflation data is sticky or goes up anymore, we're going to see, again, that major move coming down. But if inflation data is coming down, so to speak, and let's say 2.9%, 2.8%, we may actually have that jolt that brings us all the way back up here before ultimately getting rejected a little bit more. So that's going to be good news for a lot of us there. That's how I kind of feel about the Dow Jones Industrial Average. I'm going to put the weekly chart back up here. You can see that resistance. It's not going to be pretty, but now that, excuse me. Now that we have that data there, I'm going to do one more. And for now, what I'm going to do is I'm just going to put up a level of resistance right here so I can keep track of it. And for this one, let's have it be somewhat around there, around maybe 37,938. You could even put $38,000, but I'm just trying to anticipate that curve over the next few weeks because you can see that we've been going up straight for the past, 3, 4, 5, 6, 7, 8, 9 weeks in a row. 10 weeks in a row, sure, it's not something we normally have happen, but once that gravy train's over, it's over for a few weeks as we kind of consolidate and pull back. So now that we have that longer one out of the way, we're going to do a little bit more of a shorter term one. And that one is going to be based off of the COVID lows over here when we had that massive crash due to the COVID pandemic, shutting down the government, etc. Let's drag this back over here. Yeah, it looks like we should go back to 270 here. And I just want to try 50. I don't think 50 is going to work, but let me try it just for my own sanity. Nope. Okay. Let's go up to 100. And it looks pretty darn similar, doesn't it? You can see us riding down, see that resistance level here breaking above. Oh, this one's a beauty. We got lucky with this one. Okay. So we are really gliding up this line right now. You can see the levels of resistance we placed down before. That's going to be these two red lines. Everything else is all part of the Gann box. What I'm going to do now is actually add on that last part here, right here. See me drag it along. And there you go. All right. Now that we zoomed in here a little bit, these thin lines are basically what we just added. Thin line there, thin line there, thin line there, thin line there. You can see how there's this big cluster of resistance incoming for us. We're going to have some type of good news in order to get a really big pop. Otherwise, what's going to happen here is we're going to get some resistance, so we're going to glide and consolidate for a while. That goes back into that theory for the next few weeks. We're going to consolidate, maybe even consolidate downward just a tad, but not really breaking down and falling down. Usually when we come into contact with these guys, you can see there's usually a pretty general, hey, we're coming down gently, but once we break out, we can even glide on top of it. I think we're breaking out, gliding on top of it, and then that could still lead to a larger move. Like I said before, that brings us back over here to that $39,000-$40,000 realm. But we have been known to glide above these for some time. So just fair warning, I might even expect that in 2024. But like I said, we could still have that big pop before actually making those moves on the downward side. So as far as the Dow Jones is concerned, I do think we're kind of getting close to the top here for the cycle. It's not a horrible thing. It just means that we're going to have a little bit more consolidation, a little bit more of a bearish attitude, or if we're lucky, just something more of a simple consolidation, in which case that bullish momentum should carry on later on in the year. That would be hopefully something, but just be prepared for the Dow Jones to really finish off here. It's not as bullish maybe as some of those other indexes like the NASDAQ or the SPY. All right. So next up, we are going to be moving over to the NASDAQ. This thing has been a powerhouse all into itself. You guys can see AI has really saved the day as far as the NASDAQ is concerned, because where the Dow was crashing, of course, the NASDAQ was crashing and burning, dropping down about 37% in total. It was horrible for that. So same concept here again. We're going all the way back down here to 2008. Of course, the NASDAQ has had a really good outperforming of everything else, so it's just going to be a little bit lower down here. But let's go over here with the Gans box, or Gans square, excuse me. How far do we have to get out of here, though? Oh, this one's going to be huge. All right, well, let me do something very fast here. Let's just go to 990. All right. Can we go down to 8? Are we able to? 810 is a number we could work with, I think. But I'd like to have a little bit more wiggle room here, to be honest. So let's just even this out at 900. There we go. Now we're at 18 at this point, so a lot lower. Let's just bounce it up. I want to get a little more on the upside here, so let's go 20 to start off with. Is this giving us a little bit more wiggle room? I think this will work fine just because of how large this is. It'll be a lot easier when we go back to the COVID one, like I said before. But I like to give you guys two different views, just so you guys can actually have two different levels to work with. And usually, like I said before, when it comes to that Dow Jones, these little clusters of resistance are much more valuable, in my opinion, than just the technicals alone, because of, like I said, here, everything is still fairly bullish. You can see the momentum is definitely slowing down, but it's still bullish. If you can see that turnaround on the oscillators occurring at the same time as those clusters, then you know you're going to be okay for actually pulling down a lot of those assets. All right, but back over here to the NASDAQ. One last thing, as always, we just got to add that Gann square, or excuse me, that Gann box. This is already the square here. When you zoom out, everything looks so tiny, so you got to be careful about how you drag this out. All right, there we go. And you can see a little bit of that support, a little bit of that resistance. Really don't have much to worry about on the upside. You can actually see this is breaking out right now. So the NASDAQ actually looks like it has a lot more room on the shorter time frames here, and we'll check on the 2020 Gann boxes here. But it looks like it has a lot more room here. You're seeing the multiple breakouts like this. Well, actually, let me see. Did we break out here? Yeah, we are breaking out. So there's actually an opportunity for the NASDAQ to maybe squeak by a little bit higher. Same with the Dow Jones, but the NASDAQ doesn't look like it has as much resistance levels here. So what I'm going to do here, just to help me out, is I'm actually going to add those Gann angles. You can see a little bit of resistance here, nothing crazy. Let me draw that back. Oh, yeah, there's a little bit of a squeeze happening. if we could just break above this one, it looks like we're pretty well off. So let me do a couple things here. All we need to do is break above. Oh, I got the magnet on. All we need to do is really break above this right here. Now, this information is pretty useless without the next step that I'm going to be doing as far as using the next scan box. It looks like this is just too much, and I don't want to have to go all the way out to the thousands on the bottom here. That would cause some chaos because we're going to be forecasting all the way out to, like, 2032 and stuff like that, which can happen. Like, I don't know, maybe out here. But I don't feel like doing that because that's just gonna not give us the results we're really looking for in the short term here for the, and I say short term as the whole year of 2024. Nobody wants to forecast that far out. All right, there we go. Back again. Now we want 180. That's 270 again. 270 seems to be the magic number for a lot of these. All right, now let's go over to 50, I guess. That should work out. All right, there we go. Okay. We had our resistance. We managed to break out above it. That's actually looking pretty good. There still is some more upside, it looks like, with the NASDAQ than the Dow. So you might actually see the NASDAQ really continue. And this is going to be like the AI play, of course. If you guys watched the other trading streams I did before, I was really happy about those AI stocks I was talking to you guys about. They're performing very well today, or they have been performing very well over the past few weeks. Today, let me just give you guys an update on those because I know a lot of you guys have been asking me questions about it. AI. No, they're not doing well. Everything's coming down. The crypto plays I gave you are doing well. That's good enough. Back over here. Okay, that's what's going on next. Yeah, so we really do have a nice area to work with here pretty soon. So we have a high potential of 17,565. I'm not going to expect us to hit this, but the way the market's been going, you can see how there could be some big jolts here if Nvidia or some of these larger mega caps actually have some really good numbers. So that high for 2024 might just be around here of 17,569. Again, afterwards, anywhere in here, consolidation. If we start breaking back down below this level right here, that's when I would say we hit the cluster, and then March is really when we start to have a harder drop. So it looks like no matter which index you're looking at, March just makes it a little bit more of a difficult month. March, April, maybe the beginning of April, but I'm looking right here, the end of February, that last week of February, going into the first 3 weeks of March, really seems like it's going to be a volatile episode. Either you're going to have a nice pop, which I doubt because of the way the economy should be slowing according to all the experts, or we're going to be coming back down and having this chug. A consolidation and a reversal is probably most likely. That should take us back down here to the levels of around 16,000. That's not a lot when you consider how far we have gone. And again, let me get rid of these lines because they really just do look clustered if you're not used to them. But I could really see us grinding all the way back down here towards 16,000 in 2023, or excuse me, 2024. That doesn't sound bad. If we go into a recession, then I would say we start dropping back down below 15,000, going into 14,000 territory. Again, we have to wait for the economic data to show itself. But if it does, that's where you guys start to see larger crashes, where you could even see over here, we had broken out. We were fine. We tested it out every now and again. We broke out again, tested it out, broke out, hit some resistance. That's fine. Started to break down below the levels. You can see how we didn't break down. And then boom, tested support. When things get really nasty, of course, these technicals get really messy. And you can see we broke out again. Things got really happy. Tested out support, came back down, consolidation, then broke out again, actually off of a whole different level. So I would say the NASDAQ is much more bearish. I'm kind of excited to see what the SPY is going to be looking like now because the SPY itself, not looking bad. If I were to add another line here, right there for a level of resistance, then there we go. Got rid of everything else, the Gann square and Gann box. just so I'm sure here. Trend-based Fibonacci extensions. That worked out a little bit, not the craziest. We're not even close up to 19,000. I don't even want to think of that. Let's go to where the trend changed. Yeah, we're still breaking out. We still have that little bit of a cluster right up here. So I think 17,500, that's actually a reasonable goal. The way I typically will trade this market, though, going into 2024, especially as we look to see what happens later into 2024 here, I like to sell, like if my target is somewhere between 17,500 and 17,300, I'm typically going to actually not even sell up here. I'm going to sell right in this middle zone, and it might go up a little bit higher, but I'm going to lock in my profits and then patiently wait to see what happens next. There are simple breakouts that you guys can trade on the weekly charts if you guys are looking for larger moves. They're always there. They take a little bit of trust, to be frank, but when it breaks out, it breaks out. When you have the oscillators, you have the oscillators. It's all working in your favor. And right now, of course, a lot of this is going to be working in your favor just because of the way the market's been chugging along. So next up, we have the SPY. You can see it's pretty similar here. Different circumstances just now because it actually hasn't reached all-time highs. It is dealing with an order block here. We've had a few buy signals on this one for a while. It looks like somehow I might have, there we go. The last buy signal that we had on the weekly chart was right here. Let's even move it over here if you're looking for all of them. So let's drag this up. Was right here. On the weekly chart specifically, this was a great buying zone. Everything was screaming buy, and you can see over the next few weeks, things are really going hot. Just like the other two indexes at this moment in time, they are still bullish. They are not bearish. You can see the stochastic showing some slowing down here. That is to be a concern because the last time we had the crossover over here, you can see what happened. The last time we had a bullish move, you can see how that worked out. Death cross over here came down for just a few weeks. Hopefully that's just for a few weeks this time. Downward move, definitely downward move. So my stochastic indicator, it's been fine-tuned using AI and ChatGPT and other tools out there. So mine don't necessarily have the same standard settings as yours, but this one's never it fails every now and again, but it usually doesn't fail me. So just be aware that we could be looking at a little bit more of a consolidation zone, and that just means more of a neutrality, which kind of fits with some of the other stuff we've been talking about. Neutrality with a slight tinge of bullishness. We're not even close to being bearish right now. So that's the good thing here going for the SPY as well. Now, let me drop these back down a little bit here. And this time we're just going to stick with the 2020 levels of resistance and support. I think that'll be fine based off of what we saw in the last one. So this has definitely moved a lot higher than the Dow Jones, excuse me. Get the magnet off here. I think 270 is probably the appropriate for a lot of these here. All right, now at our traditional numbers, we're at 1.3. Let's just bump it up to. Let's just bump it up to 2. That's not going to hurt us too much, is it? I think that's fair enough right here. And what you guys can see before we had the Gann box on here, you can see those levels of resistance that kind of dragged us down, finally breaking out, hitting some resistance here for just about a week, breaking out, gliding down, a breakout up into an order block. This is actually a really good one here. Sometimes it takes a little bit more guessing. I'm used to doing large indexes, so I can kind of guess, hey, 2 should work here, 3 should work here, or 2.5 or 1, something like that. But there's only so many numbers you can use, so it's a little bit of trial and error, but we haven't had too much of that today. Let me lock this sucker in here. Since I told you guys I'm using a different computer here today than I'm normally used to because they're fixing up my my office space that flooded. I'm using a different mouse that has way more sensitivity than I'm used to. Let's see. This, as far as I know, this is all meant for gaming and high speed stuff. I'm a gamer, but not that much of a gamer. All right, there we go. So actually a little bit similar to what we're looking at as far as SPY and the Dow Jones. I think this is it should all be kind of intertwined if you ask me, excuse me. We have a little bit of a level of resistance up here around 488. I think I was just talking with Crypto Mickey in Audio Rooms the other day, and he was actually banking on that level of resistance as well, or something close to it. I don't want to put words in his mouth, but something similar to that. And that actually matches up there. Order block, I expect this to actually break out above this order block. Let's see, March doesn't roll around here. That's really when I'm starting to see concerns as it's dropping back down. You can see this green line right here, right? See that one that's going up? When we break down below that, that's when you start to buy, traditionally, if you ask me, or you guys could possibly add on any moving averages. They changed the name of it, moving average simple. Here we go. If you guys want to do this, you guys can, but not mandatory. 100 weekly moving averages are usually a great opportunity to buy. So if I were to get rid of everything, well, I'll show this to you at the end, but basically anytime the price action is below that 100 weekly moving average, you're usually buying ferociously for long-term investments because it's going to work out great in the long run. Buy ferociously, and look how it panned out. Buy ferociously. Oops, right there, it works out. That's a great lesson for those of you guys that like to use long-term technicals, and you guys maybe just don't know exactly when to buy, but you just know you should be buying something. Buying something during those times when the indices are below those levels is a really good thing. I'm going to take it off for now, but I'm going to use it a little bit more when it comes to the large market cap plays. Okay. So next up, we're going to be adding the angles on here just so you can see a little bit more, and we'll leave this on here just for a second. Drag that back over. There we go. All right. And you can see at this point in time, there's this diamond here. Do you see this? That's kind of our zone to work in. I really should make it something more like that. That's our current zone. The potential highs that we have at this moment are around $506. That's, I mean, that can actually happen. It's just going to have to take some type of big news. So you could imagine us hitting this top if the Russia-Ukraine war were to end. That's the type of large event it would take to reach some of these levels in a short amount of time. Realistically, what tends to happen is we're chugging along slowly, and then we have a breakout into here. It gets more choppy because you can see the constrained area. And, that's what usually happens. We don't usually just have these big booms out of nowhere. What you're going to need to have happen here basically is some type of major news event in the world of AI. I mean, there's a lot of stuff that could basically happen. But let's go over here very fast. Get rid of that type of stuff. And that's just going to be something difficult to achieve at this point. Realistically, getting back up here to 48, I think that's a great resistance level. Let me get rid of these angles one more time. And then from there, you start to see more choppiness going into the, let's just call it the second quarter of the year. Second quarter should be the worst. Third quarter should be the second worst. And I believe by the fourth quarter, we are really going to be chugging back up and trying to make some nice rebounds here. But if I were you guys and how I'd be planning this out, I'd be planning to have most of my powder start to get used, sort of most of my cash start to get used sometime in end of quarter 2 or quarter 3. Quarter 2 is mostly going to be choppy in the beginning, of my opinion, kind of going into March, and then slight downward move. But if you're looking for those types of moves where people are panicking, the way these charts are suggesting that it would actually happen in late spring, that once we start breaking down below these levels right here, that's when people start to panic. You start to hit order blocks, but the overall move is just so violent. One other thing here, level of resistance there. Let's just keep that. Well, actually, yeah, that's the Gann box level right here. So let's get rid of a lot of this stuff here. Actually, wasn't that matching up, I think? Oh, no, it wasn't matching up. It came close. Shorter time frame, it looks like there is a Fibonacci level here. Let me go over to the 4-hour chart just to see if it's really poking us down. It does look like it's poking us down just a tad here. Not the end of the world, but you just might have to consolidate a little bit longer because you are seeing this the SPY coming down just a tad today. Again, in the short term here, guys, if you guys are looking to be bearish going into 2024, all you need to see these assets do is break down below the 20-day moving averages. They're close, but they're not really there yet. We would have to come all the way down to like 470 basically, and what's 475? Definitely possible if we have a bad day. Usually we like to bounce off of them, but you guys can see that level of resistance here and support. A little bit of support right here, but once we start breaking down below them on the 20, things start to get nasty in a hurry. We're not there yet, which is why I say we could actually still have an opportunity to pop back up and then eventually break down. One of these things also that you guys should be understanding about all of these charts, excuse me, is the way the moving averages are working out. So let me go over here and just go over to the Dow Jones weekly. Get rid of everything. We don't need it all. Weekly moving averages, those death crosses, that leads to some really bad stuff. We're not there yet for the Dow Jones. We're not there yet for the NASDAQ. We're not there yet for the SPY. The daily moving averages, however, when it comes to the 20 dropping down below the 50, like right there, like right here, like right here, like right here, right? A little bit more mixed. When we're close to the highs, they become much more volatile. We are pretty much at all-time highs here, or pretty close for the SPY. The next time we have that death cross, it is going to mean something, but it's not going to happen again until maybe late January, maybe early February, and the effects, of course, would be felt in March, the following month afterwards. So just can't keep all of that in mind. Now, a couple other things here. Oil continues to come down. It's heading for a major support level here. If we start to see oil break down even more, to me, that symbolizes that the economy is in really rough shape and everybody should be panicking a little bit. The same with the death crosses here and the golden crosses. Death cross right here. We're going to be looking at the 50 cross down below the 200. It doesn't do it too often. COVID was kind of a freak thing, so that's kind of hard to make the charts look like that. But the last time it's really happened was all the way back over here in 2014 when the market was throwing a big fit, and nobody was happy about it, I guess, about some of the stuff the Fed was doing. That's okay, right? It's fine. But basically right now, watch oil. If oil starts to break down below these levels of support, like $62, or let's just say $60, the economy is going to be flushing out, and you really want to start opening puts once you see those oscillators really start to swing around. My MACD settings are your standard 12, 26, 9. My RSI settings are actually your standard ones as well. Let me pull these up. The 14, 14, 2. You're not going to use the 2, so sorry, I haven't said it. You only use the standard deviation if you're actually using Bollinger Bands along with your moving average down here. Typically, I don't like to do that, but you guys are free to do that if you guys want to. Now, the one thing that you guys might want to copy me on, this is my stochastic indicator. It's not really going to work with like crude oil because it's a commodity, but when it comes to Bitcoin or other assets out there, once you see the crossover, right, and the orange line goes into bullish territory or negative territory, that's usually where I start to say, things aren't looking so good at this point. You can see right now Bitcoin's having that crossover. This is specifically used for daily charts, but weekly charts works as well. Like buy right here, look at that buy. Sell right here, look at that sell. Buy right here, a little bit of a move. Ultimately came down because you got to watch that those moving averages. But that's not the important thing here. Keep it on oil. If it does close down below $60, things are going to get heated in a hurry. People are going to start panicking just a little bit, and you could already see going to the daily chart, oil is getting hit getting hit hard today. Other side of the story here for 2024 is going to be the dollar index. We're hitting another level of support, just like oil is, looking for more death crosses, and that's going to be a little bit more of a concern going forward too here. If we start breaking down below that 200 moving average, those death crosses are going to follow through, and you might see the dollar coming back down just to around $95. That, in theory, should help out the market a little bit. The issue here is if the economy is acting bad and the stocks are not doing well, what you're going to see happen is everything really start to come down in total. So the dollar is going to come down. You're going to see rate cuts, which should actually cause the dollar to come down even more. So a whole bunch of bad things are going to be happening here. And sorry if you guys hear any sawing or anything. They just started working downstairs, and I can hear them grinding away at something on my on my downstairs area. All right, I know we only have like a few minutes left, so let me try to wrap this up as best I can without going too into detail with some of the other cryptocurrencies and things like that. Right now, as far as crypto is concerned, everybody is waiting for the Bitcoin spot ETF. That should really give a big boom to the year 2024 for us. after we have that big entry into 2024, after we have that, I expect a pretty seismic pullback. That pullback should start bringing us back down towards $37,000, maybe even less than that. That's going to be a good opportunity to buy. Now what I'm going to do is pull back up that SMA 100. Anytime you're underneath this, it's a great opportunity to buy. Same concept here. This will eventually start coming back up sometime in March. That's actually where you're going to see the 100 back up here, closer to around 35,000. If we start dipping below that, I'm going to buy. Last thing here with Ethereum, same concept here. You really had an opportunity to buy this for a very a very long time because it did consolidate so much longer while Bitcoin was breaking out and making lots of highs and new highs for 2023. Ethereum was not doing that until very, very recently. And this is something that most of you guys will see a dip, but don't expect it to break down below this trend line. While Bitcoin may break down below its general trend lines every now and again, I think you're still going to be fine. Just like Bitcoin probably won't break down below this trend line like that. All right. You may see it, you definitely see it break down below the trend lines like this, these smaller ones. All right. You'll probably see it happen sometime in March. It'll flush back down to maybe 33,000 at the end of the day, like at the lowest we see in 2024. Going to be a great opportunity to start buying up. That hopefully should be actually below the 100. You can see how, like, right before we popped off last time, we had a few opportunities. That's the way I'm looking at it. This is not the full Bitcoin chart here. Let me pull this out. And you can see anytime underneath that, you're good. Even if it's before a bull market, it's always the best time to buy, in my personal opinion. Now, as we finish this off, I did just want to take a few minutes to talk about some of these larger cap stocks like Tesla, Disney, or not even Disney. Who cares about Disney these days? Their stock is just poor management of a company has not been boding well. But you are seeing different stocks out there, like a Tesla right now, still having these breakouts. Sure, it's hitting an order block right now, but you're seeing a bullish move on the stochastic, the MACD just turning bullish right here, and the RSI in what somewhat more neutral territory right now, which is fine if you want something to go up. It's not overbought, it's not oversold. So the way I'm looking at this is I take away this SMA here. There we go. There still is some upside with a lot of these different plays. Tesla's not reaching all-time highs, but this is an example of a breakout that should continue over the next few days. AMD, it did have a breakout over here. Everything was screaming buy since here. Looks like, what is this day? Monday, November 13th. Yep. So there was weekly oscillators screaming to buy right here. It took about a month for it to really jolt up, but the signals were there if you guys wanted to hold and if you guys are slower traders like myself. Now, when it comes to a lot of this stuff, AMD is not hitting all-time highs just yet, but you can see how there's room to go up even higher. The same concepts are applying for a lot of this stuff, which is why I keep on telling you guys, there still is more room to go up, but there's just not much room left. NVIDIA is going positive today. Another example of breakout and going higher. It's a beautiful thing right here. NVIDIA is a very dangerous thing to hold in 2024. If you ask me, I'd expect whenever we have that economic pullback, you're going to see businesses still invest in AI, but all of the upfront costs of starting to invest in it in 2023, those are really going to be drastically lowered, so to speak. So I'm not going to be expecting so many of these massive moves from NVIDIA. Go over here to the monthly chart very fast. Different breakouts working out just fine. We're in a consolidation period, and I don't think we do much more besides making maybe another higher high, and ultimately we start to come back down. Look at these oscillators. They're tilting. On the monthly chart, they're getting closer. Momentum has been dropping. That's fine. They haven't turned bearish yet. Only one that's turned bearish is the stochastic. Go over here to the weekly chart. About to turn bearish. The MACD on the weekly chart is bearish, and the RSI is, I would say, more neutral because it's been more choppy, closer to being overbought though than oversold. So there's a little bit more wiggle room for them to move up, but that wiggle room is kind of shrinking. And NVIDIA to me is the most important stock in the whole market, above Google, above Apple. I know that's crazy, but if NVIDIA falls, I believe the entire market falls down with it. And NVIDIA is giving us signals that, hey, it's getting close. Not there yet. It's getting close to falling down. When you look at some of these plays, you're looking at what's happening in 2024, kind of recap. We have a really crazy January planned out because there's going to be budget negotiations with a potential for a government shutdown. We have the big I don't even want to call it great compromise when it comes to border security and Ukraine aid and Israeli aid and Taiwan aid, that type of stuff, mixed in with a volatile election year that's going to cause a lot of chaos. They're already trying to take Donald Trump off of ballots, which is not going to go over well with a lot of Americans. There may be some political violence happening pretty soon, which is going to cause even more chaos because as people feel disenfranchised because they can't, they want to vote for somebody and the government says you can't vote for that person. It's just going to cause friction there, as you guys might imagine. And here you're going to see a lot of articles like this if you guys haven't seen them already. The US avoided a recession in 2023. What's the outlook for 2024? Here's what experts are predicting. We're not going to go over everything, of course, but basically you can see right here, the US economy avoided the recession forecast in 2023. That is true. Experts now say a soft landing or a mild recession is possible for 2024. I myself am still going to stick around with saying, hey, I think it's going to be a mild recession or a deeper recession. And the reason for that is people still have confidence. They don't really say it, but when you go out in the polls and stuff like that, you ask them questions, they'll say, yeah, I myself, I feel maybe okay, but my friend, they're struggling, this person's struggling, and I know things are more expensive and I have less money than before, but I'm still surviving. I think 2024 is the year where we see a lack of surviving and you see people struggling, like really struggling. And I'm not talking about the lower classes because the lower classes have struggled hard on this one, but the middle class is going to specifically struggle. And when the middle class struggles, excuse me, what's going to happen here going forward is money is just not going to be moving from place to place to place, and the economy is going to slow down because of that. If I'm a not middle-aged guy, but if I'm a middle income guy and all of a sudden I am fearful of losing my job because layoffs are happening. Basically, what happens is I stop spending money in preparation for such an event. Because of that, I'm not going out to that mom and pa restaurant. Because I'm not going out to that mom and pa restaurant, what's happening is that guy, that business owner, is now making a little bit less money. He can't afford to pay his people a little bit more of a raise or something like that. And then that worker that normally would be relying on my tips to go out and spend it on a movie or something, or like the new iPhone, they can't afford the new iPhone. That shows up in Apple's earnings reports. Apple now says, uh-oh, the market's slowing down. Now there's a forecast out in the stock market saying, uh-oh, things are slowing down, and it kind of spirals from there, more layoffs, things like that. I know that was kind of a weird way to put everything together, but basically, just understand I do expect to see a pretty drastic move down in the markets. It's not going to be something where you don't want to buy. Watch that 100 weekly moving average. It is my gold standard of when to buy for long-term assets. And if you guys are looking for those long-term assets, you cannot do better than that 100 weekly moving average, if you ask me. There are other averages you guys can use. You can even try that once, the 75. You can even try the 150. But for me, I like the 100 because it gives me a wide range that I can use along with other technicals and other stocks to kind of put together what the indices are made of. And that works out very well for me. So I hope you guys have a great weekend. Thank you guys so much for listening to me rant for 53 minutes now about technicals, the market outlook, inflation, debt balances, a whole bunch of different stuff here. And I hope to see you guys on my next one. I believe I will be doing another video live stream for you guys on the 11th of January. Until then, thank you guys so much. And you guys can always see me when I'm talking on the audio rooms later on at night, usually around 6 p.m. or 7 p.m. Pacific Standard Time. Thanks again.